Good morning, everyone. So, I posted a video last week Monday about candlesticks, teaching you introduction to forex trading and candlesticks. So, I was meant to post a video yesterday, being Monday, but I had a network glitch that I was unable to post any video. So, I'm back here now to teach you chart patterns. So, as you can see on my screen, we have the uptrend, the downtrend, and the choppy market. So, I'm going to show you how the uptrend is in my charts. After explaining all this, I'll go to the chart and show you how, just like we did last week. So after that, I'll show you the downtrend and also how the choppy trend also work. So without wasting much of our time, let's proceed and start from the uptrend. So the uptrend market is when, sorry about that, that's what I've been complaining about, the network glitch. Okay, since you are back now. Network is messed up. So let's continue. So we have the uptrend, and in the uptrend you have to be seeing the uptrend. If you are still a newbie, this might really look new to you, but if you have been trying to trade and you know how the market works, you know that in the uptrend you see series of higher lows and higher high, higher low, higher high, higher low, higher high, stuff like that. That's what you're going to see in the uptrend. You can still call it higher high, higher low, because that's how it works here. You can see higher high, higher low, higher high, higher low. Let me indicate that so we don't get confused about that. Okay. Sorry. We have the higher high. Let me reduce the text. We have the higher high. We also have the higher low. So this is repeatedly, you can see it is repeated here. Higher high here, higher low here, higher high here. Just be following my cursor so you can understand. Higher high here, higher low here. Then you see this higher high. So for you to know if an uptrend is valid, you must make sure that the previous higher low is not broken. What am I trying to say? What is here must not break. Like you can see here now, this broke below. So this must not happen to make your uptrend valid. You can't just go into the chart now, because I'll still go into the chart to show you. You can't just go into the chart now and see something that you are marking an uptrend and price broke below and you're still marking an uptrend. It has changed direction. It's no longer an uptrend. It might do this and still go and break structure. It's possible. It happens. But you have to be very watchful. You have to change and watch out for your trades very well if you see something like this happen in the market. But we'll still go into that. What I'm just here for is just to show you the chart patterns and how to identify them in the market. So let's continue. So that's for the uptrend. It's a series of higher high and higher low. So the uptrend signifies buy pressure. So let me list that out. When you see an uptrend, you know what you should be looking for in the market is to buy. You don't have to be looking for sales in an uptrend. Though people look for sales in an uptrend, but to avoid risk, you know you are a retail trader, you don't have much money to lose. You see an uptrend, you look for a buy setup. You don't have to be looking for a sell setup, because people sell short in an uptrend because sometimes when you sell short, the market might just reverse to a certain point like here. Just look at this arrow where I broke this trend. It can reverse somewhere like here and still take off from here upward. I don't even understand what I'm saying. Let me draft it out for you. The market can be doing an uptrend, higher low, higher high, higher low, higher high, higher high. Then you are trying to sell. Your ticket is going to come low since it's in the trend line, it's going to come low. It might do something like this. It might just hit here and take off. It's still an uptrend, but you are selling short. You are not precise. You know it's an uptrend and you are trying to sell. So this happens in the market. You might think, okay, since it's hitting back to your key level, to the zone you drew as your uptrend, the line, I think it's going to reverse there, and from there it's going to trigger up again. It might just go short. As you can see here, it came back, it made a double bottom. We'll still go into that. It made a double bottom and it took off. On reaching here, it just went down a bit and took off. It's still an uptrend because it's showing higher low, higher high. In an uptrend, you must see a break of structure to the upside. You must see a break of structure. Let me drive that out too. You must see a break of structure. I'm listing out key things you must see in an uptrend to know that this trend is an uptrend. You must see a break of structure. We call it BOS too. You can call it BOS, you can call it, let me just write it in full, but in short is BOS. Let me reduce this font. So as you can see here, in an uptrend, you must go for a buy. To consider a buy, you must see a break of structure. A break of structure to the upside. Like as you can see here, there's what do we call a break of structure? I will show you that in the chart, but let me just inscribe it here. This is a break of structure. This is another break of structure. This is another break of structure. Let me indicate that here as a BOS. So we call BOS break of structure. So what are we saying here? A break of structure occurs. You can take this down because I'll try to be fast so we don't spend time like we did last week. A break of structure occurs when the market breaks the previous high. We call this a high and this an higher low. So a break of structure only occurs when the market breaks the previous high, which is this high here, to form a new high. That is sometimes you see in some news, like in some news you can just come across a CNN, different type of news, BCC. You might just see let me just use an instance. BTC made a new high today, hitting $130 something thousand. It's made a new high because it broke a structure. Without it breaking a structure, it can't make a new high. So you have to take that in place. So when you are drawing your trend line looking for a buy setup, you should also make sure that you are seeing a break of structure to the upside. The market makes new highs before you can consider that a valid uptrend. So let's move from the uptrend to the downtrend, so you can compare the uptrend to the downtrend, so you can see the difference. It's just an opposite of it. So picturing the downtrend right now, as you can see on my screen, the uptrend was going up while the downtrend was coming down. Why all these trend lines are being drawn is because, as you can see in the uptrend, when market reverse to the trend line, it's bought. When it reverse to the trend line, it's bought. It made a new high. It reverse to the trend line, it's made a new high. These things do happen regularly in the market, even if sometimes there are always market manipulations whereby you just see a small shift. We call that liquidity. I'll still go into that. We call that liquidity, where you see a small shift and the market buys up. It will just stop you out. You'll be like, but this trade still went my direction, but it stopped me out. That's where liquidity sets in. So we'll still go into that, but let's move on so we don't waste much time on here. Okay, so this is a downtrend. So in a downtrend, you see series like lower high, lower low, lower high, lower low, lower high, lower low. Let me drag that out so we don't get confused. But I'll expect you not to just abbreviate it. You should write it in full form. So let me just take that down right now. We have lower high, this is your lower high here, and this is your lower low here. Okay, so as you can see, this is a lower high, this is a lower low, this is also a lower high, this is also a lower low. So compared to the uptrend, where you can see a higher high, a high high here, and an higher low. Let me shift this here so it don't get confusing. A high high and an higher low. So this is just inverse. The downtrend is inverse of the uptrend. Just like we did last week, where if you watch the last video where we did the sell side and the buy side, when we were identifying candlesticks. When you say market is selling and the market is buying. So as you can see here, this is a lower high, this is a lower low, this is also a lower and this is a lower low, and you can see the trend line here. Let me put an arrow here so you can know this is a trend line, so it doesn't get confusing. Okay, so this is a trend line here. So what do we notice here? When market reverses to this trend line, it sells down. It reverses to the trend line, it sells down. Reverse to the trend line, it sells down. And I want you to know one thing. When it sells down, you have to look at key zones where it's selling to. You have to take note of key zone, so you don't just take a sell and market hit a key zone without you putting your TP, that you take profit in the key zone, and it's reverse to your SL, which is your stop loss, and you'll be like, I should have taken this money when it was 0, and now it's reversed to my point of entry and still hit my stop loss. To avoid those kind of interruption or those kind of settings, you have to always learn to identify key zones. We'll still look at that, but I'm trying to picture all this out from the basics, because when you don't understand the basic, you find it very difficult to understand even advanced classes. I'm doing this basically for newbies, someone that you just want to start learning Forex and you just feel like you can't learn, it's too difficult. With you watching this, you should be able to understand. You should be able to understand, because I'm breaking it down and simplifying it to the lowest level where everyone can understand. So in a downtrend, what should we be looking for in a downtrend? As in an uptrend, you're looking for buys, so in a downtrend, you're looking for sales. So in a downtrend, you're looking for sales. So in an uptrend, what do we say? You said you must see a break of structure. So it is in a downtrend also. You must also see a break of structure, just like how it is here. So about this drawing, let me expand it so it can be very clear. You must see a break of structure. So as you can see here, this is a break of structure. The break of structure must be to the downside. So about that. This is a break of structure. My drawing might look funny, but you can laugh if you want to, but try and take this class seriously also. Okay. Let me remove this so I don't draw 2 times. Okay, so this is a break of structure. So in this settings, you see the break of structure here is breaking to the downside, unlike the uptrend where we say the market is making a new high. In a downtrend, you can say the market dips. When you say Bitcoin dips, maybe Bitcoin was in 130 something and now it dips into 109 or 110,000. You know, it's a massive fall. It went down. That's what a downtrend simply means. So don't get yourself confused. Downtrend is when something is going down. Uptrend is when something is going up. But there are some laws guiding the both of them. Without those laws, you can't just take in trades anyhow that you like. Then you have to be guided, you have to be grounded. So we're looking at the characteristics, the features of a downtrend and the similarities you can see there. In an uptrend, you just see buys and break of structure. In downtrend, you see sales and break of structure. There are still many components that are there, but we have to take it step by step so you don't get confused. So we are still going to look at all this in the chart. So without waiting most of the time, let's move to the choppy market. I've cleared this because it's just like inverse of the uptrend. The choppy market is a market where you see series where the market is not making new highs or new lows. It's just, what will I call it? It's just playing around in a given zone. The market just goes up, comes down, it's not breaking structures. I can see in the uptrend, market breaks structure. In the downtrend, it breaks structure to the down. In the uptrend, it breaks structure to the up. It's make new high. In the downtrend, it's make new dips. But in a choppy market, it doesn't make a high, it doesn't make a new low. It's just ranging. You can call it either a choppy market or a ranging market. When we say it doesn't make a new high, as you can see in the uptrend, it's meant to do something like this, making this a break of structure, showing it's making a new high. But right here, as you can see, it's not making any new high or the opposite of making a new low. It's just ranging in a certain zone. So that's what a choppy market is called. I just explained that to you. So in a choppy market, people sell, people buy. Because when you see a key level and you are seeing market ranging on that key level, sometimes you have to just leave it. If you are not that skilled to understand that kind of market, you have to leave it, because in most cases the market tends to sweep out money, sweep out liquidity, take out people that are trying to maneuver to buy, to sell, and do all sort of things. If you are not that skilled, you are going to fall victim in that situation. Just take a look at this. I just drew this here. This is not how it is in the view market, but sometimes it looks like this. If you respect the key zones and just boom buys and boom sells, but sometimes you can see something like this. You put your stop loss here, that's in this line, this red line you see here, and market just come and do a bit like this and buys. You look at it again, is that it's going to sell. The market comes here, comes up a bit and still sells, hitting your stop loss, which is this red line. That's why we will still go into something about saying you have to give your trade breathing space. You don't just put your stop loss in a key zone, because the market makers knows that that's where liquidity is. Many people, many retail traders are going to put their stop losses there. So let me adjust this back because we are treating choppy market. I'm just showing you that it's not how you see it in the drawing, it looks like in the chart. That's why when you see yourself analyzing, trying to learn new strategies and trying to go and play smart in the market, it kicks you out. Because people in the market are very smart, more smarter than me and you. But we have to learn how to ride the boat, or how to ride the bike with them, or how to sail on the ship with them. So let's look at this in the chart, so we don't waste much time. So I don't really see any features here in the choppy market. Like I just listed, in the choppy market you can sell or buy, or better still, leave it alone. Don't trade at all. Trade only markets where you see the neat setups. When you see your trade line aligning with the setups, showing you this is an uptrend, showing you this is a downtrend. Choppy markets are risky. I'll say it again, especially to new traders. Trading a choppy market is very risky. It's better you stick to the uptrend when you know this has broken structure, when it reverses, it's going to go up again, than trading a choppy market where you don't know if after the last pullback is going to be an uptrend or a downtrend, because it happens most times. You can see a market doing this, and at the end of the day, you just saw it and you want to come and take this trade, then it breaks out, forming a break of structure and an uptrend. Trade market is buying, so it's better you leave the choppy market alone. Let's go into the chart. For those of you that are still watching this video, I really appreciate, because I know you are taking your time to learn this, and you will not regret learning it, because there's no knowledge that is a waste. Every knowledge is an added knowledge. Because I spend my time to make this video to push it out to people to learn, instead of, it's not everything you pay for classes. Some things are there that you learn. You understand? But I'm not saying to pay for classes is wrong, because there's nothing you pay for and you learn. It's going to make you more gendered and more willing to learn, because you won't want your money to be wasted. But when you see something that is free, you just want to do it at your own convenience. But let's go. That's not what we're here for. I'm here to just teach you the ones I can, because I'm not going to teach you everything, because I wasn't taught everything for free. Okay, let's move on. So as you can see from the chart here, let me expand this. We talked about uptrends. As you can see here, this is an uptrend, a clear uptrend. It's not hidden. This is a very clear uptrend, because I like drawing everything out before I start any video, so I don't get anyone confused. I carry everyone along. This is a pure uptrend. Why did I call it an uptrend? Because you can see the break of structures here. If you want to draw your bias, if you want to know the trend of a market, you don't use 15-minute time frame. I said in my last video that why I use 15-minute time frame is because that's why I get more trends. You use higher time frame so you avoid noise. So that this uptrend you are seeing here on a 4-hour or on a day time frame might be a downtrend. So just this is what I said just now, just put at the back of your mind. Don't take your bias from a 15-minute time frame. Take it from a higher time frame. That's why I advise people to watch the video to the very last, because some people just watch it and just pick what they want to pick and leave and say, that guy just messed up my account. That's why you have to watch. When you're watching a video, watch it to the end. So as you can see here, this is a break of structure. Let me identify that here. Okay. We call the break of structure BOS. I want to make it bigger. Okay. This is a break of structure. So you see, after the break of structure, what the market do? The market went up. It's made a small reversal. Let me drag it out for you so it can be like exactly how you saw it when I drew it that time. I told you that it will not always be like how you saw it in drawing. It swept out liquidity. I will still go into that. I'm just trying to show you. Okay, so as you can see here, after a big structure, what happened again here? It's still another big structure after this small reversal. This small pullback, we'll call it a higher low. This is an higher high, this is a higher low. Let me expand this. I want you to understand so that any video I drop, I know I'm done with that. I know I'm done with that. So as you can see it, after the break of structure, this is a higher low. Let me mark that out. Higher low. This is a higher high. So after that, what do you see again? A higher high and higher low. This is an equal high. I'll still show you that. So what happened after that equal high? The market dumped. Because that's what, as I'm telling you, you have to study your chart well. When you don't see a break of structure, you leave the trade. I'm happy you are seeing this now. When you don't see a break of structure to the upside, you leave that trade. Don't call it this market is going up. Since it has broken the structure here and it went up here, definitely if you reach here, if you reverse a bit, it's going to go up. What happened here? After this equal high here, what happened? The market dumped. Because it's not meant to break this structure here. This is showing another bias, a different bias, a change of character. It's made a small downtrend here before it later broke the structure, if you can see. Instead of making a higher high here and an higher low, what did you do? Equal high, and it broke this structure, showing that this market have reversed to a downtrend before it came again and made a break of structure to the upside. That's why I said, when you see an equal high, or you are not seeing a break of structure to the upside, showing that this place have broken structure, like as you can see here, it went higher high, higher low, higher high, higher low. You can still take the buy to this point if you matched all your confluences. You can still take the buy to this point. As you can see, anybody that took buy from here to this place is still in it. But as long as you don't see any break of structure here, you are not seeing that this market went break this structure that is here. Let me draw it out so you can see that it's equal. If the market is not breaking this structure here, you leave it. You don't take the trade. You won't die if you don't take that trade. You still see more setups you can take. So the market didn't break the structure. It came down here. It swept out everybody who tried to take an entry here, thinking the market, if the market come here, it's going to break this one. It swept out everyone that was here. Assuming your stop loss was here now, you placed an entry here, you put your stop loss here, because you cannot put a wide stop loss. you are a retail trader. You have to learn how to buy with small money and make big money. That's how it works. So put your stop loss here. What happened there is swept everyone who tried to buy from here, because you are seeing an equal high and you are trying to look for a buy when you didn't see a break of structure, just like how this is here. So as you can see, after that, what happened again? This is a break of structure. I won't indicate that again because I indicated it in the first one. This is a break of structure. After, because what happened? The market reversed a bit. If you have to take a trade from here, as I said, you have to allow your market to beat your okay. So as you can see this now, if you have to take a buy from here, that's why I say you have to give your trade space to breathe. You don't just put your stop loss at the key level. I put my stop loss at this lower low here, and my take profits in the previous high. So looking at this trade now, it's a valid trade, but I'm not going to take the trade. The reasons is because when any trade you are taking should be able to give you ×2 of your risk. Looking at this reward ratio is 1.52. Any trade you are taking should give you 2x your risk. It's meant to be 2.0 or 2.5 and so on and so forth. So I'm going to count this as, for me, as an invalid trade because it's not giving me 2x my risk. But as you can see on my chart here, from after I saw this break of structure here, the price reversed and it bought. You see on that break of structure here, let me mark it out. On that break of structure here, after break of structure, price reversed and it bought. Same here, but price didn't reverse here. It just reversed a bit and it bought. So that is that for the uptrend, as you can see on the chart. So looking at this, you should know that from what we have been looking at previously, when I just drew a rough sketch showing you how the chart is. You can see that the uptrend is a really clear form of trading, whereby when you check with other confluences, drawing your trend line and observing your bias and other confluences from a key zone, it's an A+ setup. It's going to give you an A+ setup. So let's look at the downtrend. So looking at this downtrend, what do we say downtrend is? In a downtrend, you see the previous high. So any when you see price, where price fails to break the previous higher high, then you know the market has reversed. And when it starts showing you higher low, lower when it starts showing you lower high and lower lows, then you know the market has reversed and is now in a downtrend. Like you can see here, it broke structure. After it broke structure, it started giving you lower high and lower lows, showing that it reversed to a downtrend. You can see it here. It broke structure. It gave you, let me picture this out here, right? This is a lower high. And this is a lower low here. So as you can see, if I'm to map this out, after this last higher high, this is a lower high because it failed to break the previous high, which is the higher high. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and this is a lower low. So looking at this now, you can now notice that the downtrend is inverse of the uptrend, showing that whenever the market wants to form a downtrend, it must break a structure to the downside, and whenever the market wants to form an uptrend, it must break a structure to the upside. So seeing this now, you might look at this and say, why is this equal? There's what they call double bottom. We'll go into all that. That's a different chart pattern. Is a kind of strategy for entering the trade. But I'm going to go into all that later. Let's just focus on what we are here to learn. So you see series of lower high, lower low, lower high, lower low, lower high, lower low. That's for a downtrend, showing that when price reverses to a lower high, you set your sell stop, or your sell, what you just set a sell, so the price can narrow down from your point of entry to the next key level. Like you can see here, when price got here, if this is a key zone, as price got here, let's just say this is a resistance zone, or I'll call this a supply zone. Let's say this is a supply zone. When price hits there, let me expand it to show you. See, it's a supply zone. So after price hits the supply zone, it sold downwards. So if I'm to enter this trade now, I'll put my sell order. So when we put our sell order on the uptrend, we made our stop loss align with the previous lower low. But now we're going to make our stop loss align with the previous lower high. You match it with the previous lower high. This is the wick here, because you have to allow your trade breathe. Then you align it with the previous lower low, which is here. This is the previous lower low. So saying when price hits or come back to this supply zone that made a lower low, you should enter the trade. And that's what happened here, and the trade sold down to your take profit. And that's how this trade went. So I'm sure I was able to touch this and we were able to understand. Let's go down to the choppy market so we can wrap up. This is the choppy market. This is not really clear, but it's also a good example. After you saw an uptrend here, if you are to trace these dates down, you can look below. There's a black icon that is shaking below. You can look at it. You can look at the dates. You saw this where my cursor is right now. It's showing Monday 20 October, and if you narrow it down here, you can see it's also Monday 20 October, but the time is different. The time is different, showing that these trades happened at different time or hours. So it was showing a break of structure to the upside before the price reversed to the downside. After price reversed to the downside, it refused to make either a higher high or a break of structure to start a downtrend, which is a lower high or lower low. as the case may be. So as you can see, the trade is just in a stagnant point, showing that it's just ranging. It's not making progress, it's not deprogressing, it's just in a stagnant point. So that's why I said, if you are not really a professional or you're just struggling in the market, you just have to avoid such positions. But if you feel like you want to take a trade, looking at this key level, you know when price comes here, it sells. When it comes here, it buys. But if you look at this wick closely, this is what they call wick rejection. It's not a candle, though it's formed by a candle, but it's a wick rejection just to sweep out liquidity, and it goes back up. So if you have to buy from here, if you have to put your entry here, even if you make your trade breathe, but you have to target this low here. If you have to put your low, your stop loss here, it's wide. So this is where you likely put your stop loss. So putting it here, you can see the market manipulated your SL and still went your direction, which is your stop loss, and still went your direction. So that's why I say you should avoid this kind of market if you are not that skilled, because sometimes even if you are skilled, it also manipulates skilled traders out of the market. So like you can see this other one beside it. If you are to also take an entry from here, which is from this point, that the trade comes back here to that zone and buys up. Looking at this, you know that it went right. It went right. But due to you are not specific, you don't know which market is going to play out right. You don't know which one is going to play out wrong. You have to be careful to avoid it still. Seems the network went off again. Okay, network is back up. So you have to avoid markets like this, because sometimes it plays out right and sometimes it goes wrong. So to avoid making profit today and losing it back tomorrow, you have to stay off it. Like what I said in the previous chart when I talk about choppy market, in the examples I made before coming to the market to analyze this, you see what I said here, that the market can just manipulate. You might be thinking when the market goes up, it's going to come down. When it goes up, it's going to come down. And when it goes up again, it's going to come down. What happened here? When the market got down here, if you placed your entry here saying the market is going to go back up, let me show you what happened. Putting your stop loss here, putting your take profit here. It's giving you a good risk to reward ratio, which is 2.32. But look at what happened. The market went up and broke out, showing you a break of structure and showing that the market has changed from a choppy market to an uptrend. So on USD JPY now, what you should be looking for, that is, if you check your higher time frame and align with this 15-minute time frame, it should be an uptrend, showing that it's meant to buy. So what happened here? After all this break of structure, price came here and it's still buying. After the break of structure, price came down here and it's still buying. After the break of structure, price came back here and it's bought. So you see what we are saying now and what we have been doing since we started this video is aligning. So I've touched the uptrend, I've touched the downtrend, and we are done with the choppy market. So I'm glad I'm able to cover these three aspects in the chart pattern. There are different type of chart patterns, but these are three main aspects that you should know. I'll be posting a new video coming next week. I was meant to post this video on Monday, but due to network glitch, like I said earlier, that was why I was unable to post it. So hopefully I'll be posting a new video next week Monday. So I will expect people who watch my videos to stay engaged and follow up for more. And I really appreciate for your time, and thanks for watching. I really appreciate